All right, tell me if this sounds a little bit like a scam. How would you like free money from the government guaranteed? No fees, no commissions, all from the comfort of your own home, but you must act now. Now, in all seriousness, I'm exaggerating, but not by much. If inflation and high interest rates have you squeezed out of long-term investing, there's a great opportunity for you right now to make them work in your favor. And no, it won't last forever.
There's a better alternative than keeping your money in the bank or under the mattress.
And that alternative is called Treasury Bills, or T-bills.
It is the single safest investment on the face of the earth. They're guaranteed by the full faith and credit of the U.S. government.
And you don't need a financial advisor like Paul Schatz to buy them, just a website. In fact, you can only buy them digitally and only on one website.
TreasuryDirect.gov. It ties in right with your bank account.
If you're not familiar, T-bills are a lot like savings bonds and certificates of deposit, or CDs, that you'd buy at a bank, just without the bank as a middleman.
You're loaning your money to the government so they can fund the debt, and in return, they're paying you an interest rate.
They differ from stocks in a number of ways, both good and bad. The first of which is the rate of return. To be clear, if you can afford to do long-term investing, Schatz said the stock market is still the gold standard.
The stock market has been the single best performing asset over the long term. Depending upon which index you choose, the Dow or the S&P 500, you're going to get between 8 and 9%, including dividends.
Now, Treasury bills can't guarantee you 8 to 9% profit a year, but counterintuitively, the stock market can't either. That's because it averages 8 to 9% a year. And when you look at what the Dow Jones has done in one-year chunks, you'll see why. Look, in the late 90s, you were getting 20 to 30% profit repeatedly. On the flip side, in 2008, it lost 30% in 1 year. That's why it's crucial to make sure you have your money in the stock market for a long time to even out these wild swings. Otherwise,
you don't get that really smooth, really easy to accept, non-panicky path.
Now, the allure of T-bills is that their rate of return is guaranteed because you're loaning the government your money at a set interest rate. Granted, 2 years ago, that interest rate was effectively zero. It was so low that a $10,000 investment was only making you $1 in profit a year. But then when the federal government started raising interest rates to combat inflation, look at this, boy, did things change. Now that $1 a year is closer to $500.
It is the most meteoric, epic, historic, parabolic rise on a percentage basis in history. Yeah. We've never had rates go up on this trajectory in history.
So now you have two good choices. 8 to 9% a year in stocks, but that's not guaranteed, or over 5% a year in T-bills that is guaranteed. And what also sets T-bills apart is how short-term they are. You can set them to mature in as long as a year or as little as 4 weeks, so you're not tying up your money for too long.
It's free. No fees, no cost, no expenses. They take money out of your account and they put it back in.
But like I said before, this won't last forever. Once the federal government starts lowering interest rates, those T-bill returns will come right back down to earth as well. So if you'd like to take advantage now, head to Fox61.com right now. We've got a step-by-step guide for you there. I'm Tim Lammers, Fox 61, Connecticut's news station.